Hey, what's going on, family and friends? It's yours truly, Asher J. Bell. Today I want to give you another mortgage minute and talk to you a little bit about down payment and closing costs. And what are they? How much is it? Right? So we can make it make sense to you, because this process can be complicated if you don't have a real estate professional and mortgage professional that you can count on, like myself. So let's jump right into it. So down payment, let's start there. We're going to do this off of a basis of $350,000, right, which is a median home price, right, in select areas. I'm in the Central Valley and also in Sacramento areas. You can still find homes around this price, but let's just start here as an example. So at 3.5% down, this is mostly all FHA programs. FHA stands for the Federal Housing Administration, and it's backed by the government. So it can make home ownership more of a possibility for more families. They start out at 3.5%, and at 3.5% of $350,000 is $12,250. And we'll just go right down. 5% is $17,500. 10% is $35,000, 15% is $52,500, and 20% down would be $70,000. Now, there are so many different types of loan products, but you have to find the loan product that suits you the best in your situation. So there's conventional loan products that start at 5% down all the way to 20%, but most of your FHA programs only require you to put 3.5% down, but that doesn't exclude you from putting more money down. Now, what are closing costs? Because it's not just the down payment you have to come up with, it's also your closing costs. What are these closing costs? Well, the main ones that stick out, and some that need to be paid up front, are going to be your home, your roof, and your pest inspections. You're going to have to pay for these out of pocket, but these are costs associated with closing the loan. You need to get your inspections done so you can make sure you're buying a house that is of good quality. Also, one of the most important reports that you need is your appraisal report. This is going to be ordered by your mortgage lender. This is going to determine the value of the home, and the banks need to get a valuation of your home in order for them to determine what the home is worth. Now, we're going to talk about your origination fees and points. Loans aren't free. It costs money to originate, to compose, to do a loan, in other words. So that's what your origination fees are. It's the cost of the lender creating the loan for you. In other words, they call it points. Your origination fees are basically also known as points, which is about 1% per point. So if it's 2 points, 3 points, 4 points, these are things that you need to ask your lender and have your lender explain to you how many points are they charging you, because a point is equal to 1%. Also, you have your prepaid insurance, you have your homeowner's insurance, your title insurance policy to protect you from a chain of title where there might be any encumbrances or liens that pop up on title, and that they wouldn't affect you because you have your title insurance in place prior to you getting keys to the home. Also, your homeowner's insurance. They require you to have homeowner's insurance because of earthquakes, floods, fire, etc. If there's any major damage that happens to your home, they want to make sure you're protected, and they're also protecting their investment by giving you that money to purchase that asset, right? Eventually, over time, it becomes an asset because you can rent it out, you can leverage the equity, and so on and so forth, Airbnb out that property, so it becomes an asset. Now, there's also your title and escrow fees. What is title and escrow? Well, the title and escrow company, or the escrow officer, is the third party that handles the conveyance of title, meaning they're transferring the ownership per the title, which we also call a grant deed, from one owner to another owner. And they also have a neutral third party account, so it's not in the real estate agent's hands or anyone else's hands. It's in a neutral, safe third party account. And escrow is the one that manages that third-party account, so you know that your money is safe through the transaction. They also check into the chain of title to see if there's anything on the preliminary title report to protect you from anything that was attached to that property in the past. Now, this may seem like a lot, but when you have a great advisor walking you through the process and can accurately explain each part of the process, it's not complicated at all, because that's my job, is to make sure that you're educated through the entire process, so you're never guessing or wondering what's going on or why something is needed or why something is taking place. So if you have any questions about down payment, closing costs, or what you qualify for, send me a DM. I'll be happy to help you start the pre-approval process. Thank you guys for watching.